So thank you very much for having me. I'm Alexandra. I'm a growth investor at Perpetual Investors, and on the side, I'm a passionate business angel focusing on female-founded companies with a positive impact on the world. And I'm super excited to host this panel today and to lead the discussion on what other KPIs next to financial return should be of relevance in venture capital. But let's firstly dive into a few facts there. So DROM estimates that 15% of the total capital invested in Europe went into purpose-driven tech companies in Europe in Q1 this year, which makes Europe one of the most impact-focused ecosystems in the world. With regards to diversity, Europe does not stand out as well. So only all women founding teams received less than 1% of European venture capital in Q1 this year. Yeah, let's have a look at these facts, and who better to ask than my four panelists today, who are all experts in these fields of impact and diversity, and are here to share their thoughts and insights with us. Firstly, I would like to introduce Ranali Mitra. She's an early-stage investor at Antemis. Next up is Felix Hilti. He's an investor at Ananda Impact Ventures. Hi, Felix. Next is Sophie Bolzer. She is CEO and founder of Advice. And last but not least, Anna Vnuk. I welcome her on stage. She's head of community at European Women in VC and part of Xperia VC. Welcome on stage. So I firstly would like to give the panelists the opportunity to introduce themselves and answer the following question in one sentence. What does an inclusive world mean to you? So let's start with you, Swanali. Left to right.
Right. Good afternoon, evening, everyone. My name is Swanali. I'm an early-stage investor at Anthemis. My focus is investing in female-founded and co-founded companies in fintech and fintech-adjacent areas at the pre-seed seed stages. So very much right up my alley, this panel and this conference. Thank you for having me. And inclusive worlds means opportunities that come equitably and equally to everyone, irrespective of their backgrounds and their gender, sexual orientation, disability. Yeah.
Love it. Thank you. Felix, next, please.
Yeah, good afternoon. And first of all, thank you for inviting me today. I'm super happy to be on this panel with these amazing speakers here and co-panelists. My name is Felix. I'm part of the investment team of Ananda Impact Ventures. We are an impact VC fund based in Munich, and we invest in companies that address a social or environmental problem in a scalable way. We currently closed our fund number 4 with 108 million. So we are ready to invest in early stage technology companies that want to make the world a better place. And with regard to your question, I think diversity on the one hand is, of course, investing in the best capable founders, regardless of their origin, gender, and much more. But it's also about empowering and enabling people to unfold their best potential.
Nice. Thank you. Sophie.
Hi, everyone. Really excited to be here. So I'm Sophie. I'm the founder and CEO of Advice. So Advice stands for Audio and Advice, and we are unlocking the power of voice at work. So our customers are using Advice to really scale knowledge exchange across all layers and hierarchies of the company. Early customers such as Red Bull and ADAC. We raised last year with European VCs, with unicorn angel investors actually. We were taking that to really build a dedicated team of, meanwhile, 18 FTEs. That are very diverse, and we also use that capital to just launch a scalable product. So much about Advice and about me, and what does an inclusive world look like for me? I would say it's all about people, where we really see diversity as one of the most important assets.
Anna, my turn.
Well, to start with, I'm a member of a team of a very first fund founded by female only in Europe. That's one thing, on one hand. On the other hand, I'm heading a community called European Women in VC, which is a platform with an agenda for an equal capital at every level in the landscape. That means at the general partners level and at the startup level. We believe that this is all going into circles, and we have to look at that issue, an issue of diversity and diverse capital as a whole. And answering your question, Alex, I'm really looking forward to the time when we will stop differentiating between female and male founders, calling each other names. This is absolutely the same for investors. We'll be just focusing on wonderful projects, wonderful people and teams, and we are all actually going to be doing and focusing on what venture is for. That means taking the responsibility to fix the problems and to, well, work for the society and for the better future for all. So that will be my answer. Thank you.
Great. There's nothing more to add to this. Let's firstly dive into the first topic, which is the relevance of sustainability and impact in general as a KPI in venture capital. And Felix, let's first start with you as an expert in the impact space. Sustainability seems to be in every investor's mind currently. So could you please share how you, with Ananda, as a long-standing impact VC, incorporate sustainability in your investment decision process and why it is an important KPI for you?
So, of course, as an impact VC, sustainability and impact is at the core of what we do every day. That's why we are here. But I think what's super important to distinguish is between like this ESG and what's impact and what's sustainability, because it's not the same thing actually. So if we talk about ESG, we talk actually about creating transparency in the financial markets, which is super important. Because it helps investors to pick the company that actually does best in certain areas, like, for example, has the lowest CO2 footprint in a certain industry, which is great. But impact in investing actually goes beyond this avoiding harm, actually. It's really, impact investing is really about contributing to a positive solution, like contribute to a positive change in society or for the environment. So that's what we have been doing for 12 years now. So we started really with a 7 million proof of concept fund 12 years ago, which is, it's like nothing today. But now we closed our fourth fund with 108 million with a lot of capital to invest in companies that create positive impact. And I really want to highlight one company here because I think it's better to understand what we do and to understand the difference of like impact and ESG and sustainability with an example. Open Bionics is one of our portfolio companies in the UK, and they develop and produce bionic arms, especially for children. So children with limb differences, they get this 3D printed arm, which is not only cheaper and more comfortable, but the company also has a collaboration with Disney, with Marvel. So they have this cool like Iron Man design or Star Wars design. So actually what the company does, it empowers the children with limb differences to actually feel like superheroes themselves. They really improve the quality of life and for the children significantly. And that's exactly what we do. So we don't invest in a company that it's just doing less harm than another company. No, we really want to pick those companies that make that address a relevant problem in the social or environmental sector and make really measurable and important changes. And of course, we measure this impact KPIs as well. We have like scaling indicators and performance indicators. So look how many people are affected and in what extent. But I think in contrast to ESG and all this discussion about sustainability, impact is not always standardized. So we really look at each company individually and look how much positive change the company has created in the past.
Well, got it. Thank you very much for sharing that. Super interesting. And this is now the viewpoint of a strong impact VC fund. Non-impact VC funds have been slower to fully integrate ESG or impact criteria into their strategy and investment process. Swanali, how can we make sure that incorporating ESG/impact in VC is no box-ticking exercise, but really rather a key differentiator and performance driver in the market?
Yeah, I think that's a really good question and sort of goes to the heart of the panel, right, Alex? I think one way to think about it in my head is to reframe the way we think about ESG, right? Financial returns and ESG doesn't need to be mutually exclusive. And I think I'll illustrate that with the story of Anthemis and how we think about it as well. So ESG principles have been at the core of Anthemis' DNA since inception. So we've been around for a decade as well. And one of the things that we wanted to do was to have finance work for everyone. And the way we decided to do it was by incorporating 3 core guiding principles to the way we ran our funds, the way we deployed our capital. One of them was DE&I, right? So who is on your investment team? Who is deploying the capital? And do they actually look like the rest of the world? And that's very true for our case. We've got about 55% of our employees who are women. About close to 60% of our investment decision makers are women as well. And there's other diversity statistics that I can go on that I'm super proud of. But that's one. The second one was virtuous cycle outcomes. So similar to what Felix, you were saying about Ananda's, I guess, impact, mission, and vision, we defined it for ourselves as a virtuous cycle outcome. And what does that really mean? We said to ourselves that every company that we invest in needs to bring a net positive contribution to the world. And so that does not need to be it has to be a non-zero-sum game, right? And then the third thing that we said was that it needs to be a collaborative effort across the ecosystem. And I know there's, Anna, you touched on this, where it has to be a cyclical effort and everybody in the ecosystem has to be a part of what we're driving towards. So we really try and do that in every bit. And so it's starting to show up in the investment track record that we've created, and that kind of flows into saying, hey, this is financial returns, right? So we've got about 1.5 billion in AUM at the moment. We're investors in about 180 plus companies, including funds. Yet 46% of our capital sits in the hands of women and people of color. And you do that by creating a team that follows all of these different guiding principles. So if I were to then wrap it up and kind of bring it back home, I think one way to start doing it is by representation. And that's a good start.
Cool. Yeah. Yeah, true. I mean, this shows that ESG and financial impact can go hand in hand, right? And I would love to hear your opinion, Sophie. As a founder and CEO, how do you incorporate ESG at Advice, and do you see it paying off? Because now we heard from the investor side, but I think at the end, it's the startups, right?
Yeah, I think ESG is a good framework, but to be honest, startup in our phase, early stage, of course, the most important topics you focus on is product market fit and growth. So you probably are not coming across ESG unless you start your first fundraising process, where probably in due diligence, they ask you a lot of questions on that. And then also when you have your first investors reporting. So this is actually when we came across for the first time across ESG. And then obviously I had to deal with the topic, and I was then surprised like how many boxes we already tick without even like having dealt with the topic before. I think most of it, and this is also why it is a generic framework, is kind of state of the art, how you do business nowadays. And I think it's important also for startups to, even if you don't check all the boxes yet, to consider these criteria, to have it on the radar, and then to already maybe think about future plans on how to implement certain actions within your company sooner or later in order to fulfill them. So I think it's a very important topic, and it's a good framework. And to mention a few, I mean, when we were going through this process, diversity is a very important topic for us. So at the moment we have 18 talents, 18 FTEs in our team. We're 50-50, so 9 guys and 9 women. We have people from 10 different countries working with us at different locations. So when it comes to diversity, I think we're quite set. Also, when you have a look at the team leads, it's almost 50-50. And then what else? We live transparency in everything we do. I believe that this is one of the things you really need to have as an early stage startup in order to grow. So documenting everything, really trying to explain how we come to certain decisions, from top to bottom. Sharing knowledge with advice with each other. Just kidding. A lot of other things. For example, fair and transparent salary schemes. I know transparent, this is not something you can probably live yet. There are a lot of companies who do that. Even if it's not transparent, I think it's a must that you keep it fair, especially in times where there is a war of talents. Of course, it gets harder and harder because you need to attract talent. But as a startup, you always have the opportunity to work with VSOPs, to keep your burn rate to not a minimum, but to an amount that is, good, and still keep people motivated and attract them. And then also we established very early on company values, company policies that include a lot of ESGs. For example, no-go, of course, discriminating anyone based on gender, race, sexuality, religion, or else. So this is what we already have in place. Cool.
Thanks for sharing that. I would love to stick with impact and ESG, but we have another topic also to discuss, or want to discuss, which is diversity. So especially diversity as a KPI in venture capital. And Anna, you just launched the European Women in VC report just a few days ago, which is the perfect timing that we're here now. And you analyzed the importance and role of women as check writers as well as founders. Let's firstly look at the founder side. Could you share a few facts there, and especially why diversity should be a relevant KPI in venture capital?
Thank you. Well, when I'm listening to my colleagues here at the panel, I'm slightly lesser fond of a name of a term KPI as a diversity. I think it should be a standard, not a KPI. It should be just embedded in our nature and culture. We're talking about ecosystem, right? So the ecosystem should be based on diversity and should be inclusive and should sort of create that culture from the start. But that's just one remark. Well, yes, we have launched on Friday a report that covered the data on both bottom, that means startup level, and the top, the level of check writers, general partners, and how we answered the question of how the capital flows and how the capital is distributed in all levels. You asked about startups. Well, there's nothing better than I can tell you that I could actually tell you last year. We, in 2021, even if the market grew, we as venture capital ecosystem were able to deploy 100 billion euros into the market despite of COVID and the fear that everything is going to suddenly collapse. But out of this number, you can take only 1.8% of the capital and put it in hands of female. And this is what we as venture capital ecosystem did. That's a shame. Only 9.3% went to diverse and mixed teams of founders, and the rest went, of course, to all male teams. And that is all surprising for all or not, but what is surprising for me that this number is falling, and that is actually abysmal. And this is what we should focus on. More. Of course, the number varies from country to country, but those are very slight differences. Some regions are doing better, but in general, we cannot even reach 20% in any of the regions, any of the countries of 27 European Union plus UK. So this is horrible. I think we'll be answering a question why that is actually a problem and why we should sort of go beyond from looking at the startups only in a second. So sorry for not being able to give you a better data, but this is very saddening, right? So we are circling around 2% and not being able to break that glass ceiling at all year to year, even if the market is growing.
And did you find, or do you have some findings why diversity is important, also on founder teams to have?
Well, last year we published a report on a smaller region, actually, and I'm going to start with the data that I know and I analyzed myself. We couldn't do that for the 27 EU countries plus UK because nobody has been reporting that. But for Central and Eastern Europe last year, we measured performance on capital productivity for female founders, and you can imagine that it's 96% better capital productivity by diverse teams than by single gender teams. I mean, here male only. So, yeah, absolutely, we should do that. Well, there are many studies that I'd like to maybe just briefly come across. There's a McKinsey study showing that teams with female and executive roles perform, or mixed teams, let's say, because we will be, changing the side in a second. With female and executive roles perform 20% better on revenue. Of course, we know from facts and from a lot of case studies that female or diverse teams exit faster at better valuation. They deliver revenues quite fast. So I would definitely point you up to the studies. They are quoted in the report. There are extensive studies on how the performance looks when you apply diversity in the startup ecosystem.
Yeah, thank you so much for sharing that. And then I think it's the next point. It would be perfect if you can add something on that, Sophie, as a founder and a CEO. What is your viewpoint on that, and how did you manage to really hire a diverse team?
So, I mean, what is the question of the panel, right? Should financial return be the only relevant KPI for VCs? And I totally see and understand it's the main objective, right? Because otherwise your business model is probably not working out. But especially since there's so much research out there that shows that there are other different factors than just financial KPIs to consider if you want to have financial returns, such as diversity. The question is why is that not yet a key metric for VCs in order to reach their objective? And I think we're on a good trend. For example, when we were fundraising, I saw many VCs having these kind of KPIs, which I think is really great. And I have the feeling that this is going to increase over time. So yeah, I think definitely in our team we live diversity. I know what is the dynamics of a non-diverse team and a diverse team. I went to a just girls' school until I was 18, so I know that also just female energy is not so good. Like really diversity means having people from all genders, people from all backgrounds. And when it comes to hiring, so a lot of people always discuss the fact that as a male founder, you are more likely to build male teams. And that's not only a problem for guys. I, as a female founder, attract more female talent. So it's also a challenge for me to build a diverse team. Because, of course, there's so many more female applicants applying at a job for our company. And then it's a question of how can you ensure diversity without discriminating someone. And for us, obviously, we are 50-50. That turned out really good. What I can recommend, especially also for founders, for companies who have a problem in really getting more diverse applicants and building these teams, is, for example, have a look at how inclusive the language is they use to communicate. There are great tools, for example, WittyWorks, which helps you to really use inclusive language in all your communication, especially for job descriptions, to also, and I think we have some great examples here, especially Starbucks on the panel, to really also use employees, use people you have in your team who have management positions to kind of present them to the outside world, because that acts as a role model and will automatically attract diverse talent.
Thank you. Let's take a look now at one sector that has a specifically large gender gap, which is fintech. So, Swanali, you are a fintech investor, so I would love to get your opinion on that. And why did you, with Anthemis, include diversity as a KPI for you in your strategy as a whole?
Yeah, I think to Sophie's point earlier, like really does beget like, right? And so it's fascinating when I always like to say that I grew up in financial services and fintech and looked at it from different angles. So when you really put the numbers on it, things come to fruition in like a jarring way. And so if I take a step back and think about why is it that financial services has been a laggard, if we look at the number of women in the financial services workforce, or the fintech workforce, I always like to go back to STEM degrees and master's degrees. So in Europe, 50 to 60% of women get undergraduate degrees, get master's degrees, PhDs, right? Yet, in fintechs, there's only 30% of women who represent the workforce. That then trickles down to about 20% who are CEOs. And then executives to begin with. 20% CEOs would be great. I'd be celebrating here. But then goes into 5% at CEOs. And that sort of shows you how fintech products are created. And then it also shows you how fintech products are used by women, right? So if you look at the usage gap between men and women for fintech products, there's a good 8 percentage point difference, and I'm pretty sure I'm being very exclusive with the data, right? And so there's a lot of different factors that haven't been accounted for, and 8% is still a reasonable number. And then if I start looking at how many fintechs then get founded who are female-led, it's even more abysmal. So that's about 7% overall, and I'm a geek, so I'm slamming all of the numbers at you, but it's really helpful to kind of think about it and visualize it, right? So 7%. And if I put it in terms of unicorns, what does that mean? So there's about 300, more than 300, 309 to be precise, fintech unicorns globally, and we're so proud of it. Fintech for the past decade has grown 1,250%. Can you believe that? Yet, there's only 20 plus 20, 22, 23 fintech unicorns that are led by women globally. And so you're starting to see this pattern. It's systemic, and it kind of floats in globally. I know we'll talk about, female check writers and how that kind of represents itself as well. But to Anna's point, over the past decade as well, we've only managed to dedicate about less than 1.5% of capital to female founders in fintech, and that's pretty consistent. That's what we do. And it comes down to how we then represent women at every stage. And I love to say that the only way we're going to break these vicious cycles is by introducing virtuous cycles. We're going to have multiple hacks at diversity inserted at every level. Who are your check writers? Who are your staff, to Sophie's point? Who are your founders? Who are your LPs? And then you start seeing affirmative action really take place.
Mm-hmm. You're right. A sector on the other side of the spectrum is impact, because here studies show that the stake of female-led startups is one of the highest. So I would love to get your viewpoint on that, Felix. When looking at your portfolio companies, do you see that as well, this trend? And how do you incorporate, in general, also diversity in your investment process?
Yeah, very good question, actually. So first of all, I want to say, based on our experience, I can really absolutely agree with my co-panelists. So we see that more diverse companies are more successfully, financially. So why is diversity important for Ananda? It's not only because it's the right thing to do, it's because we are convinced that diverse companies are more successful in the long term. They have less blind spots. They are more resilient. But when I'm talking about diversity, of course, it's not only about gender. We're here at a female founders event, so of course gender is super important. There's still a lot of problems, but I just want to highlight diversity is also about having different economic backgrounds, origins, and other capabilities. But now with regard to your question, yes, we actually have quite a good deal flow from female founders. Still, most of our deal flow comes from men, but of course we see that impact investing seems to be more attractive for female founders. But of course, we also kind of try to support this. So we are here at events like this one, at this wonderful event, but we also do something what Sophie said. So we try to adapt our language. So we are careful and still working on that, how we communicate on our website, on our social media challenge. It's super important for us to attract the right talent for new investments, but also for our portfolio companies. And we also have an impact term sheet for the companies we invested in, and we really require them to develop a diverse team, not only on the top management level, but also on lower levels. So we really want to drive and enable diversity across our portfolio. Still, only 45% of our portfolio companies have diverse founding teams. So having said that, there's still a lot to do.
That impact diversity, that impact term sheet, I would love to see at one point. Cool. Yeah, let's take a look now at the importance of diversity on the investor side of the table. And back to you, Anna. The gender gap in European VC funds remains significant. And as I read in the report, only 15% of GPs are female, so not a lot. Could you please share a few insights on that with us? It would be super interesting.
Well, you said 15% scares you and surprises you. I have a different data, actually, and the one that we were trying to give to the market for a year right now. It's a different approach to the problem. It's actually looking at the firepower. So if we're looking at check writers, we actually have to see how much money they have there in hands to be deployed. And the number is lower. There's only 9% of all assets under management that we measured, and it was over 75 billion with over 400 funds. Only 9% of those assets under management lie in hands of general partners being female. So that's even less. And I assumed, starting the analysis and building up the methodology, that the number is going to be even lower. And it is even lower if we take out the biotech and life sciences funds, which are actually substantially bigger because they need a patient capital and much more money in order to finance R&D. And those are funds like, for instance, Jato, Revaya, and others looking at the sector in particular. And they are bringing the number up. But if we take out this entire sector, we're stuck at around 4% of assets under management in hands of female. And of course, you can answer the question why. It's because for so many years, female general partners were not able to raise bigger funds. They were not able to break the 25 million threshold and are pretty much still stuck at that. But we went into the research deeper and deeper. We made a survey and surveyed over 120 funds. And to be honest with you, I was just struck with everything that I found with the answers. Of course, beginning with the structures of and the composition of investment committees, there are only 1 out of 5 in average. Members of the investment committees are women, so that's just very little. So here you have the answer to that. And the second thing, and what we really wanted to do with the report is try to build a set of good definitions and good approaches towards who actually is a partner, who is a general partner, how the investment decisions are being made. And we have basis and grounds to fix that problem and to build a set of definitions, because all the funds that reported to us reported certain number of general partners, male and female, but in the same time they reported that only 70% of those reported general partners have access to carry. So you can actually see that there's no correct and no common understanding of who actually general partner is. So with that data, we can, well, of course, go around and complain that the numbers haven't changed, but we have good grounds to start building something, taking step-by-step solutions towards educating the market, towards creating more incentives for LPs in order to invest into female general partners. And well, I think everybody should use that data, and everybody should actually take a look and go home and make homework, or do homework, make at least one, well, let's say one KPI, if we are using that term, for own's playground, right? In order to, based on the horrible numbers that we have presented, to change something and create maybe a little bit more inclusive ecosystem in general. So
Yeah, shocking numbers. Wow.
they are indeed.
It's interesting maybe also to hear your thoughts, Sophie, from the founder's point of view, to have a diverse investor pool. I know you have a diverse investor pool, that's why I'm asking you the question. And how did you bring women on the cap table? How did you manage to do that? Because I hear from many founders that's not too easy, especially in the early or in general in the phases.
Well, easy answer, I would say thanks to female founders. I think you guys have an amazing network, and that gave us the opportunity to meet a lot of investors, including female investors. And I think there are a couple of similar networks out there that really do the groundwork in bringing these people together, and also obviously getting more female investors basically on board. And then, of course, it's a matter on how to find them. So this matchmaking job is obviously working really great. Thanks again, female founders. And I think in general, for me, it is very important to not only have diversity in my team, but also among our investors, because it's also people we work with, right? And what Felix said earlier, diverse teams, chances are lower that you have a blind spot. So they bring in different viewpoints and are more likely to guide you in the right direction. And this is also why you want to bring the right investors on board, to support you in your growth journey, to maybe lead you in the right direction, to give you the right push at the right time, right? So having this diverse set of investors really helped us a lot in order to move forward faster. So very grateful for that. Also for the upcoming round, we'll definitely try to have, again, a very diverse set of investors.
Cool. And I quickly want to wrap up this topic with comparing different geographies. So, Sonali, you're based in the UK. And could you quickly just give us a few points or an overview of the differences between the UK and other European ecosystems with regards to diversity on the investor side? That would be super interesting.
Yeah, no, happy to. I would have loved to give a more positive answer, but unfortunately I don't have one. And the numbers look equally bleak. So I think I loved the firepower metric, Anna, that you guys did, right? That really put everybody, money where is where your mouth is. And so I think for Europe-wide, the number was 15% of GPs who are women. In the UK, it were about 13%, so not doing that great. 9% of firepower Europe-wide, UK was 5%. And then when we looked at the composition of junior members who were women, in investment firms and what that composition looked like, there was only 35% who were in the UK versus I think it was closer to the mid-40s in Europe. So really not doing that great. I think we have a lot to hold ourselves accountable for, and I think, Sophie, to your points, there's a lot of networks that are super helpful. So you and I are both part of Alma Angels, which is amazing.
Hey.
And there's Hamisa, there's Angel Academy in the UK, who are brilliant in connecting female business angels, in perpetuating investment towards women-led and co-founded and founded companies, which is super helpful. But one of the things that I love saying is that we have to keep remembering that a lot of the push for female check writers is still at the early stages. And I'm painfully seeing this within, my investment scope and my portfolio as well, where 60% of the capital that's allocated to women goes towards the early stages, which means that there will come a ceiling. There'll come a ceiling very quickly beyond seed and Series A when female-founded startups start falling off the cliff and the graduation rates are much, much higher. And so how do we keep pushing the virtuous cycles, and how do we keep making sure that even at the later stages, there's good representation of female check writers who have firepower, right? And then keep creating those virtuous cycles where there are more female unicorns created, and they will write more checks, and we'll have more women equally represented.
I would love to continue there, but we don't have too much time left, and I have one more question for you guys, which I really want to address. So I think we heard many interesting facts and observations from our panelists, and with regards to diversity and sustainability, and that there's still a lot of work ahead of us. So as a final question, I would like to ask my panelists, what would be the one action you would take to reshape capital flows in Europe and thereby address these issues? Or in other words, how can we lead today to shape tomorrow? Svanali, you start.
I'll go first. Two very, very quick ones. Reframe. It doesn't have to be mutually exclusive, capital deployment and ESG principles. And represent, show up at every stage of the ecosystem. As simple as that.
Yeah, VC investors are catalysts for change. So on the one hand, support founders, especially on the talent HR side, to find the right talents. And second, more check writers, more female check writers.
I think we don't have enough role models, not only when it comes to founders, when it comes to angel investors, when it comes to VC partners, especially female ones. So I think one good activity would already be to help promote more successful role models and give them a stage. And I think this is what we're doing here, right? So that's already a really good move into the right direction.
Well, I'll be the one who will say money. So capital as in a real anchor for female-led and co-led funds at the GP level. And then you can figure out the rest will happen as we're investing alike, and that gap will fix itself if we deploy enough capital at certain level, and our recommendation is at the fund managers level. So real anchors.
Yeah. Include all stakeholders here, not only founders, GPs, but also LPs at the end. I think we're almost at the end. I think it was a great discussion. Thank you so much, guys. I had a great time.
Thank you.
Thank you, female founders, for organizing this.
Thank you very much.
Thanks for having us.
Thank you.